Cathy, you mentioned Tesla. It's a name you and I have talked about before. Do you think Elon is eroding the longer term premium positioning of Tesla by cutting prices and just given the competition? Look, we heard from GM this week with all the EVs it's coming to market with. Do you think more price cuts are coming at Tesla just to keep competitors at bay?
Well, I actually think it's the other way around. I think that I think traditional auto manufacturers are going to have trouble keeping up with the price declines that Tesla's technology is enabling. The secret to success in innovation is driving costs down. Technology follows learning curves. So figure out what that learning curve is. That's a big part of our research. And in the case of batteries, for every cumulative doubling in the number of units produced, battery costs decline by 28%. Elon is on a different battery cost curve decline. He is leveraged off the consumer electronics industry, those kinds of batteries that go into laptops and phones, and others. Automakers and auto analysts made fun of him I remember this very clearly, 2015, 16, 17. He absolutely chose the right technology, and I think others are rethinking it now. If they do not switch over to this kind of battery technology, they will not be able to catch up with Tesla in terms of price declines without losing money. Whereas Tesla's gross margins are probably going to continue moving up on balance, even as it is cutting prices, because its unit volumes, the economies of scale are going to be so significant.
Cathy, but I do have one last question for you before we have to let you go, and that's about ARK itself and your benchmark ETF, ARK-K. As we talked over the last year, and as your ETF dramatically underperformed, you said, well, it's not surprising during this time that we would see declines. You said that even towards the end of 2021 that you thought things were getting a little toppy. Where are you now? What kind of year is ARK going to have?
Well, we have a 5-year investment time horizon. I'll just tell you that our confidence in our outlook over the next 5 years has increased dramatically. I would say that what happened with Fed policy last year, which we thought was unnecessary, and we were in print saying that we've come to the end of that, and the market sees that, and I think that the time horizons, which shrunk to almost nothing. In fact, we saw investors looking backwards to guide them. They wanted, they were looking back at the cash flow over the past year to guide their investment decisions. We think real returns are going to be delivered from those companies that are going to deliver on the innovation around which we have centered our research and investing over the next 5 years. And we do think now that the shock of interest rates going up 18-fold, I think it was. We've never seen this in history. We've never seen a bond market act as badly since the 1700s. So, of course, long duration assets were going to be the primary victim. We believe that chapter is over, and that you never say the coast is clear. There are always risks, but we think we're on the other side of the most difficult time that innovation oriented strategies have ever had. I've never seen anything like that in my career. We're on the other side of it, and we think the future is bright for innovation. We're really excited, as you can see from our Big Ideas 2023. But we believe that the hidden gems that will benefit perhaps the most from artificial intelligence are those companies with proprietary data sets. And we use Tesla all the time as a prime example of a lot of technology attributes. One of them is having the largest pools of real world driving data in the world. In fact, it has more of that kind of data, orders of magnitude more of that kind of data than all of the other auto manufacturers and technology companies involved in transportation around the world. So we believe that it will be in the pole position for the autonomous taxi platform opportunity, which is a software as a service opportunity with massive margins. And it's also a winner take most opportunity. The company that is able to get an autonomous vehicle from point A to point B the most safely and quickly is going to be the winner. That's going to be the go-to service. Technologically enabled innovation that rides down learning curves, which are expressed by cost declines, which turn into price declines. You'll notice that Tesla is cutting prices, and many people jump to the conclusion that, oh, they're having so much trouble now, there's so much more competition. No, Tesla can cut prices now that supply chain issues are passing us, because it is riding down a cost curve. The battery cost curve declines. And I think its battery costs are lower than anyone else's. Its drivetrain costs, is more correctly said, are lower than anyone's out there.
Right.
And so he wants to proliferate electric vehicles to save us from environmental disaster. That is his mission. And he is going to drive down prices. When you drive down prices, units explode. It's no surprise to us, even without price cuts last year, that electric vehicle demand was up more than 60%, while gas-powered demand was down, I believe, 7%. Yep. The consumer preference shift has occurred. We are now in prime time for electric vehicles.
I want to go back to Tesla in a moment, but I want to go back to your ARK Innovation ETF. We've done the story on Bloomberg. You guys had the best month on record for the fund, up 28%. All ARK ETFs, all of the eight ETFs are up, 7 of them in double digits. Do you see that as vindication for your investment theses? And do you think it can continue?
Yes, we believe that innovation was one of the biggest victims of the massive interest rate increase we saw last year. In less than a year, I think 18-fold increase in interest rates. It was like a massive earthquake.